Hey guys, what's up? Alec back with the daily stock market, and look at that. We have many stocks with a green Friday. We have SPC up 12.5%, Shopify up 5.7%, Coinbase up 5% again, and the list goes on and on. In this video, we're going to talk about the best stocks under $10 per share. So yes, we might be talking about ChargePoint. We might be talking about Virgin Galactic, SPCE. So make sure you strap in because this is going to be a banger video. I know you guys absolutely love the videos when I talk about the best stocks under $10 per share. So make sure you share this video with a friend, slap a like, and let's dive right into it. Okay, so the first stock we're going to be talking about is NEO at $11.74 per share. Now, they are on this list because they were under $10 per share last week, and there's a good chance they will go under $10 per share towards that $9 price point once again. So when NEO gets under $10 in that $9 price range, $8 price range, I think they're one of the best stocks under $10 per share to be buying. Right now, if we scroll down, they have a market cap of $19 billion, and at one point they were significantly higher. They actually peaked out around $60 per share, and they're down 61% in the past year. So the fundamentals of NEO are still intact, so this could be a good time to be buying, especially if we see NEO under $9 per share, under $10 per share, and into that $9 to $8 range. Here we can see NEO stock rallies as China's Tesla eyes stronger 2023. Is it a buy is the question. NEO targets a booming market for electric vehicles. The Chinese EV startup promises high growth with a revamped lineup. After overcoming big operational challenges, is NEO stock a buy? NEO News, founded in 2014, NEO went on delivering booming sales in 2022. NEO grew sales 34% in 2021. NEO more than doubled EV sales. Those gains came despite pandemic-related supply chain disruptions both years. In a positive sign, NEO's EV sales jumped 60% in the final quarter of 2022, which was extremely recent. As COVID headwinds eased and new electric vehicles rolled out, deliveries hit record highs in November and December. That boosted investors' hopes that NEO is on a stronger path for the new year. So it goes without saying that stocks under $10 are inherently more risky than their counterparts above $10 per share. So obviously NEO is still a risky bet, but if you are looking for an electric vehicle play, if you're looking for an international play, NEO stock below $10 per share could be the stock. Now let's jump over to the next stock that we're going to be talking about in this video, SOFI. SOFI, their ticker symbol at $5.40 per share. In the last week, it's up 16%. So it looks like we are seeing some positive momentum being brought back to the stock. However, if we scroll out to the past year, they're still down 58%. And if we looked at where they topped out, it was around $22 per share. Right now, they're at $5 per share. The market cap is $5 billion. This is a stock that a lot of people and investors talk about all the time, SoFi Technologies. So let's go over some bullish points and some bearish points. The first bullish thing that we see, this was updated in November 23, by the way. The company's acquisition of the Galileo was likely a major win for the number of accounts using the Galileo platform has sharply risen since the purchase. SoFi has enjoyed rapid growth driven by introduction of new products and broader adoption of digital banking. SoFi has managed to rapidly launch an impressive array of products and services, and the company remains the only firm offering a full digital service model. So this is an industry disruptor stock. They're trying to go after the likes of JP Morgan, Bank of America, which means that there's a lot of risk involved because one of those big guys like JPM could easily go into the digital space and take something like SoFi out. If we look at what the bears say, we can see that many of SoFi's products and services are the result of partnerships or are easy to replicate, creating the risk of future competition, especially with JPM Morgan, with Bank of America. So you definitely have to keep an eye out for that. SoFi's near-term results will be affected by uncertainty surrounding the politics of student lending, which is another huge thing. SoFi's revenue growth comes at the cost of rapid growth in the company's expenses, and SoFi remains unprofitable. If we scroll down, we can see that they are on the verge of profitability with their EPS close to around -9 cents per share, which if we look at the chart, we can see that they are trending towards profitability, which is a great thing to see for SoFi. Let's talk about DraftKings stocks at $14 per share. Okay, they are up 18% in the past week. So a lot of these stocks that we're talking about have had rallies this past week. The stock market has been rallying into the new year. However, a lot of stocks are still down significantly if we pull out a chart on the last 12 months. Okay, now DraftKings is on this video specifically because I think it will go under $10 per share again. DraftKings is a risky one, but it's one that can pay off with a market cap of only $5.7 billion. You can also see that they are battling for profitability, and unfortunately, they're getting very sporadic earnings in EPS. Now, this article really highlights the risks of investing with DraftKings. Here we can see DraftKings is faced with large competitors, more equipped to effectively scale an online gaming platform, or an online gambling platform is what it really is. The primary revenue driver for DraftKings is their online sportsbook, a notoriously low-margin industry. Gross margins have continuously decreased. Even the overall size of the market has been and will continue to grow. DraftKings may face bankruptcy unless they are able to implement some creativity within their business model. And here we can see that backed up with their income statements and their financial statements. Here we can see net income in 2018 wasn't that bad. It was only negative 76 million. Now in 2021, in the most recent year, we can see they lost as much as 1.5 billion. They just burn that money. And per quarter, if we go to the most recent quarter, they're burning 450 million per quarter. So bankruptcy is definitely a concern, especially if they're continuing to burn that net income year over year, quarter over quarter. Now, total revenue doesn't look as bad. Obviously, it's growing significantly, but the main thing to look at right now is that total income, because we want to see them get towards profitability and away from just burning money. Here we can see that their balance sheet really isn't that bad, though. They only have 65% debt to assets, with their assets much higher than their liabilities. However, if we see that debt to asset ratio starting to creep higher and higher and higher, that's going to be a red flag. We can see it's creeped up around 10% just in the last few quarters. So if we continue to see those liabilities rise, that is going to be the biggest red flag for DraftKings. And the last stock that we're going to be talking about in this video under $10 per share is Snapchat at $9.76. Here we can see them up around 3.7% in the last month. We have seen a pretty good rally in the last few weeks, up 20% from lows of $8 per share. Okay, and if we pull out to the year, we can see that they are down 74% still. So is Snapchat a good one to consider under $10 per share? We've even seen them top out at around $80 per share. So if we do buy them at $8 per share, there is potential to see a 10x return on Snapchat if Snapchat does get back to all-time highs, and that's a big if. Okay, as we scroll down, we can see the market cap is 15 billion, one of the smallest market caps on a big, huge tech company. Okay, the PE ratio is non-existent. It's not a profitable company. They keep going from profitability and dipping back down under to unprofitability. So they definitely need a more stable business. Obviously, this is a risky stock as well. We can see some of the bullish points, aggressive investments in innovation, which also brought about Snapchat Spectacles, may expand the firm's ecosystem, diversifying its revenue sources and making the company profitable earlier than expected. Snap's hold on younger users may provide significant value to advertisers seeking to target younger demographic, with a unique multimedia app feature focusing on further differentiation. Snapchat may take social media market share from Twitter or Facebook. okay, which is an interesting thought. Some of the bearish things: by issuing only non-voting shares for its IPO, Snap's management is protecting its control over the firm, which can be viewed as significant risk. Snap is late getting into the market, which Facebook dominates, with Instagram also. Many of its users are also belonging to other social networks such as Facebook, Instagram, Twitter, so the firm will continually have to fight to capture new users, their time, and their interaction. Snap may struggle to capture enough digital advertising dollars from the incumbent platforms like Google, Facebook, Twitter in order to drive them towards profitability. But you can see that Snapchat is starting to get creative. If you have Snapchat or if you follow some creators, you can see that they are posting on their Snapchats every single day. They've partnered with Snapchat to make vlog-like stories on their Snapchat every single day. So if you like a creator and if you want to follow a creator, it gives you some incentive to pull up that Snapchat app and see what one of your favorite creators are doing. In my opinion, if I buy at $8 per share, and even if I sell at $10, $12 per share, that's going to be a good swing trade and a good return on investment. And obviously, none of this is financial advice. We talked about in this video is extremely risky, so just remember that and keep that in the back of your mind. And thank you guys for all the love and support you've been showing on the videos. I hope you did enjoy that one. Now at 189,000 followers, on the brink of 190,000 followers, and then 200,000 followers after that. So thank you guys for all the love and support you've been showing on my Instagram and YouTube. Go ahead and check out success number 7 from all the past success last week and the week before. Go ahead and click on success number 6. Check out more success stories. Now over 700 positive testimonials on our close friends list. So message me here on Instagram if you want to be a part of it, if you want to get access to my trade and alerts of when I'm buying, when I'm selling, what options I'm taking, price points, strike prices, expiration dates, and everything in between. Thank you guys so much. I'll see you in the next video. And remember, don't time the market, buy the market. Peace.